It was very highly anticipated that a rate cut would come, and that is exactly what we got. However, it was a bit of a surprise in terms of the degree of rate cuts. Afternoon. So this week is all around the Fed decision and press conference, and certainly had quite the surprise there yesterday. So we're going to kind of debrief and break down what we heard in not just the decision, but also the press conference to follow. My name is Brandon Steele, financial advisor with Mainsail Financial Group, and our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out a bit of the noise along the way. And again, this week is really entirely focused around the Fed, so we are going to just jump right in, and that will kind of be the focal point for the entire update here this week. Before I jump into some of the reading between the lines side of it, what I want to highlight at first is just the actual decision that was made. So many of you may know this, but basically the Fed meeting yesterday was the first one in a while where it was very highly anticipated that a rate cut would come, and that is exactly what we got. However, it was a bit of a surprise in terms of the degree of rate cuts. So the Fed cut rates by 50 basis points. In other words, 0.5%. And many people believed that we would see 25 basis points, as you may be remembering from the rate hiking. Basically, the 25 kind of hike cycle was kind of the norm there for a while, but they came out with a bang and decided to kind of go quickly here at the first cut, and did cut by by 50 basis points, excuse me, and suggested another 50 basis points kind of planned by the end of the year. Whether that happens or not, we'll have to wait and see, but that was kind of the suggestion. So there's a couple of things I want to break apart here in terms of what was actually covered in the press conference to follow. The biggest theme that I'll try and highlight is that I think that a lot of what we heard in the press conference was questions around trying to understand why this 50 basis points versus the 25. And honestly, I don't know that he really ever answered, except kind of sharing concerns around the labor market, which seemed to be the focus, but then also kind of like backing it up and saying not that concerned with the labor market. So a couple things that he had highlighted. He had suggested that payroll numbers are artificially high, and kind of, based on this is why they concluded a higher rate cut was necessary. But again, in the same breath, he kind of backed that up as well. So the reason I wanted to highlight this is that I think the jobs side of things was definitely a kind of focal point in that press conference. And we've talked about this quite a bit over the last, let's call it a couple months really, but especially the last few weeks, where he had alluded to the idea that, some of the payrolls numbers are getting walked back. There's a little bit of discrepancy, and the reality is that the labor market may not be as strong as even it seems on the surface, which even if you look at the data on the surface, it looks like there's some slowing. So, he had mentioned payroll and job creation has slowed, and this bears close watching, I believe, was kind of his terminology, but basically felt that it was time to kind of recalibrate the policy, and they're hoping that this allows the economy to continue to grow, is what he kept kind of coming back to. He did also mention that he wanted to kind of use this as an opportunity to make a good start to this. He said that's a sign of their confidence. And obviously, what he's referring to in terms of their confidence is inflation coming down, because again, there were certainly some voiced concerns around the labor market. So again, a sign of their confidence in inflation coming down. But what I want to share is, first off, just a reminder that, as the Fed has continued to voice their projections on all of this, just for what it's worth, they have been very off in a lot of their projections over the last couple of years. So I just want to highlight this, to take this with a bit of a grain of salt. When the Fed's talking about the labor market not being a concern and inflation, feeling confident in the fact that that's going to be lower, it's great to hear their perspective on it. And it, they have a lot of data, but ultimately they have been wrong repeatedly in the past. And so, we'll wait and see what actually comes of this. At first, in terms of the markets, the way that different bonds, interest rates, stocks, gold, commodities were trading, it kind of looked like the market was expecting that this meant inflation was going to kind of come back into play. Whether that happens or not, again, only time will tell. So we'll have to wait and see. But of course, that is the potential risk here of cutting too soon, is that we could see inflation. Although again, money supply is maybe the more important thing to watch here for that trend. But either way, definitely, a lot to break apart here in that press conference. He did share, for what it's worth, that although this was the initial movement in this direction, he said, do not expect 50 basis points cuts as kind of that new pace. And I think that what we saw as a heads up is the bond market was really pricing in more 50 basis point cuts to come. So bond market at first really loved it. Basically, it was just like as is. And then as time went on, it became more and more clear that it might not be a continued pace of 50 basis points. And so yields started changing a little bit from there. And what I want to maybe leave you with is just a thought is, he's really highlighting the fact that he's not worried about the labor market. The economy is so strong. But my question is, if that's the case, why are we cutting rates? Their dual mandate is inflation and labor market. And if inflation is still not to 2%, I realize it's coming down, but it's still not to the 2% target that they want. The only reason, generally that they would cut rates would be the labor market. And he did spend a lot of time on that. But, it's just really interesting where, it's curious what the Fed is seeing, where all of a sudden there's this huge shift to a kind of a much more focus on this 50 basis points, whereas just last meeting, it was a very different tone from the rest of the Fed members. So obviously it will be interesting to watch here as we move forward. And obviously markets are up pretty strong here the day after on Thursday. So, we'll see as things digest a bit where we go from here. But definitely a lot to unpack. It was quite a surprise. There was certainly a number of analysts who were expecting 50 basis points, but the huge majority were expecting a 25 basis point cut. So they definitely surprised, I think, quite a bit here. And so, again, it will be definitely important and interesting to see what comes as the market digests this. But also coming up, we have consumer confidence and jobs, but we also get another inflation read on next Friday. So this will be really interesting given all the Fed's comments, right? I'm really watching that inflation data point next Friday to see where that kind of comes into play. Obviously, this rate move will not impact inflation for that Friday data point, but nonetheless, it will be interesting to see where that falls given kind of the path and the Fed comments here. So hopefully that's helpful. Again, all about the Fed here this week, as you might imagine. So we will skip the question of the week, but be sure to tune in next Thursday where we will kind of break apart some of the data and then kind of gear up for that inflation point on Friday as well. In the meantime, have a great weekend and we'll see you next Thursday at 3.